All right, so this is the second part of the startup panel series. This is the investment community. So we talked to a few entrepreneurs in the last session, and I recognize some faces. My name's Joshua Corman. I'm the research director for the 451 Security Group's enterprise security practice. I am filling in for Nick Selby, who could not come today. And since we've had a couple substitutions, I'll let each of the panelists introduce themselves, starting to my left here.
My name is John Harthorne, and I'm the founder and CEO of an organization called MassChallenge. I think I'm the only non-investor person on the panel, but we run the world's largest startup competition. So it's open to anybody in the world with any idea in any industry. We're seeking startups that have high growth, high impact businesses, and we are giving away $1 million in prizes. The competition just launched, and the deadline for submission is June 11th. The top 100 teams, as judged by volunteer investors and lawyers and entrepreneurs from the ecosystem, will receive 3 months of completely free office space right around the corner on Fan Pier, gorgeous brand new luxury building, all free of cost, and then they would also be matched with top-notch mentors, and we have some of the best in the business, founder of Monster.com, people like Bill Warner from Avid Technologies. Desh is on our board, and we have a lot of Desh Deshpande and a lot of amazing people. So they get paired with some of the best mentors in the world for that 3-month period, work towards milestones, and then there's a final judging round, which with judges including Desh Deshpande, Josh Boger, Steven Schwartzman from the Blackstone Group, the CTO of Xerox, Chris Hughes founder of Facebook and MyBarackObama.com, et cetera. And they will determine the 15 to 20 teams that will split the $1 million in prizes, and there will also be a bunch of in-kind support. And our goal really is to integrate the investors to the process so that we give out $1 million, but we actually unlock $25, $30 million in investment alongside that so that businesses can launch immediately.
Thanks. Peter Cooper. I'm with Incutel, which is it's a government-funded venture capital firm. It's kind of been a little bit of a shift lately, though, where it still does traditional VC investing. We're now moving more towards I would say, pay-for R&D type of model, where we have companies that have compelling technology we think would benefit the intelligence community. We would work with the company directly to help adapt that technology from a commercial point of view directly into a government application. So that is appealing to a lot of companies. In fact, some of the panel members have companies that we've invested in or alongside of. And again, it's the idea of helping the government catch up to what's going on in the private sector. So it's only private companies. I run the security practice in particular. My focus, of course, is right in line with that. And if you have great ideas on how we can make the country safer, better, et cetera, that's what we're trying to do. So that's why I'm here.
Vishy, Venugopalan. I am with Longworth Venture Partners. It's a local early stage venture firm. We invest in information technology startups, early stage, which is Series A and B primarily. And I spend most of my time looking at infrastructure software, which includes everything below the application layer broadly. So virtualization, cloud computing, including, of course, security. We like infrastructure software as an investment area because it's in a way it's an evergreen area, and there always seems to be yet another wave of innovation coming down the pike. So we're pretty excited. We have invested in the past in security and compliance companies, and we continue to actively look for investment opportunities, and that should just about cover it.
I'm Jeff Fagnan. I'm a partner with Atlas Venture here in Boston. Atlas is currently investing Fund 8 to $285 million fund. We've been around for 30 years. Information security is one of the areas of focus for the firm and one of the areas of focus for myself. I was a Series A investor in a company, Data Power, which Eugene was just up here on the panel. It was a pleasure working with him, and he's right. He did all the hard work with that company and deserved a ton of attribution. I was a Series A investor in a company called Bit9 for endpoint security, Series A investor in a company called Veracode, which some of the prominent people are affiliated with around this conference. I'm involved in a couple stealth startups that deal with security on the consumer and on the enterprise side, and continue to look at this space. I think that one of the topics today will be how do you build really big security companies. I think it's been challenging, but nevertheless, I think there's a need out there in the market, and I remain focused on it.
Hi, I'm Maria Sereno, and I'm a partner at 406 Ventures. We're an early stage technology venture capital firm located about a quarter of a mile from here. So I want to thank the organizers for making this so convenient. Like Jeff, I invest in a lot of security deals. I actually came to this by being a security entrepreneur and operator, having started a company called Trident back in 2000, wound up selling it to VeriSign in '04, and then worked with Jeff to help get Veracode started as well. I'm also an investor in Bit9. Jeff and I actually spent a lot of time together. And I'm also invested in a company called Memento, which is a fraud company located up here in Burlington. And like several of my fellow panelists have mentioned, I really enjoy the security space. I enjoyed it both as an entrepreneur and I really like it as an investor. It is an evergreen area. It's an area that attracts some of the most brilliant entrepreneurs in the world. And I think having the right business model around a really interesting security technology can make all the difference. So delighted to be here.
Okay, thank you. So we had a pretty bad year last year as overall in the industry, specifically in security. Many people said that IT security was recession-proof. Upon further reflection, it really looks like compliance-mandated security was really recession-proof, and things like PCI and other derivatives really buoyed the spending. So could we kind of do a compare and contrast on how is the investment climate attitude? Is it bearish? Is it bullish? Between, say, pre-2009 and now? What's it before and after? Why don't we start on the end?
So a couple of observations. And this is kind of going back, sort of 2000 was a great time to start a company, right? Money was flowing. You could be a person like me that at that time couldn't spell security, and you could get money from just about anybody you wanted. And there were a lot of security companies that got started, 99, 2000. Then, obviously, the world changed. Tech took a big hit. VCs sort of looked at the space in general and said, oh, you know what? We made a terrible mistake. We overfunded this category. It's too crowded. There's too many players, competing in the same spaces. And so for a while, there was a really big pullback, right? So 02, 03, 04, tough time to get a lot of new security companies going. Then, it seemed that there were some bright spots in 04, 05, 06. You did see some interesting companies start to come on the landscape. And I would say, in the past, year to 2 years, security by and large has been, I don't know if I would call anything recession-proof, right? But security companies have been oddly advantaged in an economy that has forced companies to do more with less. In particular, Google China hack, a bunch of the very prominent things that you all are, intimately familiar with, have forced companies to wake up and say, we can't continue to take the same approach. Knocking our head against the wall, expecting things to change, doing the same things over and over again is a definition of insanity. And so companies really did, for the first time, wake up, reach out, embrace new technologies. And every single one of our security and fraud portfolio companies has been highly advantaged over the last 12 to 20 months. And all three of them had record years, in a time when other companies were struggling, because they happen to be market leading, have innovative technologies, and now they have demand in the market that before they were trying to create, and now that demand curve has switched. So I actually think, and we've seen this in other recessionary periods before, great companies emerge and can be built during very tough climates because those tough times force people to do different things. I don't think it's so much the recession as it is that it's been an unprecedented time for security attacks. And that's calling for a very, very different set of approaches, and that's when companies turn to startups and early stage companies versus the status quo.
Okay. That's a great point. As a follow-on to whoever wants to come on next, is that universally true? Is it rising all ships, or are there specific topics that are doing better in the wake of Google China attacks or compliance? Are there brighter spots and darker spots out of the, I think it was a staggering 70 different markets I tracked when I was at IBM, 70 security markets, which is, according to most of the buyers, way too many. So are there specific focal areas that are doing better now, or is that a universal statement that they're all doing better?
So again, just speaking from my portfolio, so fraud is doing extremely well, right? In a recessionary period, there's a lot more disgruntled people than usual. And so there's a lot more fraud that gets committed, so people who have better mousetraps to stop fraudsters are doing well.